Man, excitement abound. It is the 13th of February today, day away from Valentine's Day. Guys, I hope you have your roses on layaway today for the ladies. Interesting data. You saw the graphic I started with today's show, which was climbing the wall of worry. And the reason I put this one out here is just because, as Big Eb and others are pointing out in the chat, just odd things going on. Just you would think that today's numbers would have caused this market to have a bigger sell-off, and all of a sudden they rallied. We'll get to why that is, what are some of the hypotheses, but welcome everybody. I see we got people all over the place. Joaquim in Kansas, good to see you. I see Steve down there in Phoenix. It is raining cats and dogs out here in California today. Loving it. We're loving the rain. Bring it on. My German Shepherd doesn't like it. He's laying over here upset, staring at me like, why can't we go outside? Why can't we go in the rain? Well, after the show today, I'm taking him for a walk in the rain. He's got to go out. All right, so let's talk about climbing this wall of worry. And I want to show you a couple things that I think are interesting because, is it low volume? My volume should be good. I'll dial it up a little pop. There you go. I just moved it up just to see. I have the power, Sava. I've got the power. Okay, so you may have seen, and this is where I have issues with the financial markets. You guys know I have a lot of issues with the financial markets, but one of my things that drive me nuts, I have trust issues. Not only do I have issues with the data that's being released, but just trusting that the data is good. Well, it got popped up a little bit there, John. If it's too loud, let me know and I'll dial it back down. I want to take a screenshot or show you a screenshot from yesterday. Just yesterday, right? We're not going way back in time. We're not going to crazy historical stuff. But check this out. Here's a graphic from yesterday. All right, you guys see here, you can see it said Thursday, February 13th, PPI numbers were expected to be 0.2%. It said the previous number was 0.2% month over month, and we were expected to come out at 0.3%. Now, what's funny is they have gone and modified this stuff. Again, focus on this line, right? I wonder if I can circle it. I don't think I can. Oh, there you go. Right, this is what I want you to look at right there. Okay? And the reason I'm emphasizing this so much is how the hell do I know if data is good or bad? Because that said expectations for this morning were 0.3 and the previous number was 0.2. So if we came out at 0.3, things should have been fine. Instead, we came out at 0.4, right? So we came out at 0.4. That obviously is showing inflation much higher than we thought, double what it was the previous month. Now, that doesn't mean that things are going to go haywire or tank, but here's what modified, and that's from Forex Factory. This afternoon, not even this morning, but this afternoon, Forex Factory changed their numbers because here's what it shows today. You guys see here, here's your PPI line. I'll highlight it. And it says, the previous number was 0.5 and we expected 0.3 and we came out at 0.4. So according to this modification, this would indicate that inflation is dropping. Not as much as they wanted, but dropping. Isn't that kind of weird? It's only 25% higher. Yeah. Well, in reality, what we had was 0.2. They expected 0.3, and we came out at 0.4. So they tweaked this previous number, which is total BS. Yeah, it's so bizarre. I don't like that they do that, but I took screenshots for posterity because I thought I was losing my mind because going from 0.2 to 0.4 is way different than going from 0.5 to 0.4. Because then if you read Forex Factory today, you would think, this is good. Inflation's actually lower than we thought. No, because if you look over here, inflation was actually higher than what we thought. Bottom line is, this is pretty bad to do that. You usually do this last. I usually do, Margaret, but I'm emphasizing is the fact they changed this data. And I'm starting off with this one. Yeah, is it cook the books? That was Doge. Good one. I like that. What information can we trust? Chio, that's what I'm asking. I don't really know what I can trust here. I don't believe the numbers that came out. I usually don't believe the data, but I'm going off of market reaction to previous numbers versus expectations. And maybe the agency that reports producer price index modified their numbers. So maybe the Bureau of Labor Statistics, the BLS, changed their numbers. And that could be. I really just, I don't know. I don't know how it's all going to pan out. And if you look here, you can see here The actual for January 14th, which is the previous month, was 0.2. Yet right here, it says 0.5. So something's wrong here. Trust me, Margaret. Don't trust anybody who says trust me. I love it. Anyway, I wanted to share that with you today because this to me was the big story. But according to Forex Factory here, it's not that big of a deal because they modified the previous number to 0.5. But you can see right here the actual number was 0.2. That was the January 14th reading. So this picture is not even true. This picture would have a line that was lower. It would be down here at 0.2. Regardless, we have a nice jump to the upside here. So certainly worse than expectations. And this coupled with your CPI number from yesterday should have a lot of people going, okay, this isn't a 1 point data. It's not just CPI is out of line and PPI is normal. Now they're both showing elevated levels of inflation. And then we had a long talk about that yesterday, so I won't bore you on the inflation discussion until we get to our core PCE price index in a couple of days. But why are we rallying? Why would the markets look like this today? Now let's go here and show you the S&P. Nice 1% gain for the S&P, screaming towards all-time highs. You have NASDAQ as well, ripping right up into that next area of supply, which we talked about. I talked about a couple days ago, saying we'll probably get up to that 22,050 mark, which we hit it. We're at 22,080 right now on the NASDAQ 100. Then you can shift over to the Russell 2000, the RUT. Certainly not heading back to those all-time highs, but a nice bullish day. So the broad market indexes, all three of them up over 1%. Why? We got inflation coming. This should be a bad thing. Well, he said unemployment was good. Yeah, I don't know if I necessarily put even much stock in the unemployment claims anymore. Because, I mean, there was 220,000 was the previous reading. They expected 217, and we came out at 213. So, yes, 7,000 fewer people filing for unemployment claims. That's, I guess, all in all, a good thing. Really, I think it comes back around to tariffs and the new talk from Donald Trump. Of course, we know he was going to tariff Mexico and Canada and China. China's going through, and now all of a sudden, the reciprocal, which he mentioned a couple days ago that he was going to do, we're doing reciprocal taxation. And that includes VAT tax from Europe. So if somebody's taxing a product from Europe with a VAT, an American product in Europe, then we're taxing your stuff as well. We all can have different opinions on the taxation side of things, whether it's good or bad. But if you look at this, I love the graphic. I feel like this should be a Oprah Winfrey. You get a car, you get a tariff, you get a tariff, and I'm going to give you a tariff. Well, I think the market is a little nervous about the tariff situation, but the good news is it's deferred. It's until April. And of course, he has a team in place to look at what the impact of this might be before we actually hit the switch. So again, I think that this is posturing and positioning yourself, saying, hey, EU and other parts of the world, you have a couple of months before we start doing this. So prepare yourselves. And if you want to work a deal before we get to that point, before we come to culmination, then let's do it. But I'll give you till April. So no big deal. Yeah, I'm fine with reciprocal tariffs. I don't, if you're charging taxes, value-added tax in Europe for our goods and services, et cetera, then do it. Yeah, fine. I don't see a problem with that. Exactly, Oliver, the tit for tat. Buy the Dip says the Ukraine talk. Maybe. I think that most of us would agree that let's just come to some peaceful resolution and get past this so no more lives are lost. Find some agreeable terms and conditions with Ukraine and Russia. If Trump has to be the arbitrator here, okay, I'm fine with that, but let's just end it. Let's get past that. And I think if you get past that, there's a lot more stability, within that region, and maybe some of the hostility towards Russia and other countries that might be associated with them in this process will start to diminish. What is noteworthy, I don't know if you guys saw what's going on with the ruble. Holy cow. Ever since Trump made that phone call, look at the chart of the ruble here. It's the best performing currency on my watch list. And you can see really from Tuesday till today, a big jump up, right? We had an increase in the ruble's purchasing power of 8.5% in 2 days. If you go back to the low point we had just in January 1st of this year, the ruble's up 27.8%. So unfortunately, those of you who want to go to Russia for vacation, it's starting to get a little bit more expensive, but I'll hold off on my vacation trip for now. So a lot of real confusing stuff out here, honestly, with regards to market direction. I can go to the broader markets, at least, and look at the pictures here and see what is the data telling us. Didn't Russian markets get halted today? I don't know about that, Sava. I don't follow Russian markets. I follow the ruble every now and again, but I didn't hear anything about that one. It very well could have. I know that they were absolutely rocking to the upside. I don't know, but I heard that they were having significant increase. Let's see. Let's go Russia. We'll go indices. And let's go to a Russia index. Well, a little optimism there, I think. Look at the gap up. You had 5.99% jump up today in that Russian index. So, yeah, I could see it being halted. I mean, it's been on a pretty ugly slide, but really over the past, since late December, it's actually been doing really, really well. But I don't know anything about Russian stocks. I don't trade any of them. So let's go through our top 10 here and just kind of run through these. When you had the dollar show the weakness that it did today, which here's your dollar index, we screamed right down to those levels that we had mapped out. This is certainly going to be a very critical point for the dollar index. If it breaks down below this, and I think the low point of that zone, in my opinion, it could be difference of opinions here, low point of that zone is about 106.70. If we get below that, then I think you're going to have a pretty quick fall all the way down to 105.75. And maybe I'll put a line on here just so we can have that drawn. I'll put a horizontal line where the bottom might be if we break that yellow. That should be a good catalyst for our equity markets, right? A weak dollar would be a positive thing for the equity markets. So I think that's part of the reason we saw such optimism today. We got that risk on piece, people dumping dollars, buying stocks, and pushing the value of the equity indexes up. So all in all, good from the market perspective, not great from your global purchasing power of your dollar. 10-year yield gave back all of the gains from yesterday. We had a beautiful up move yesterday, and I mentioned that we got to get a close above that 106.50 mark, and we didn't. And now all of a sudden gave back all of it. We were down 2.03% on the 10-year, still at 4.533%. Now, moving up the list, Bitcoin is still doing nothing. It's just really been sideways, pretty ugly. I was getting excited yesterday. It looked good, right? And of course, I have more of a vested interest now in Bitcoin's success than I think I've ever had. Obviously, I own Bitcoin outright, but I also have MicroStrategy. I also am long IBIT doing an option strategy there, so I've got quite a bit going here with Bitcoin. So I'd like a move. Could we get a move, preferably to the upside here on Bitcoin would be great. But chart-wise, it just doesn't look good. Just mute sideways action, even though Michael Saylor did buy some more Bitcoin, didn't really have much of an impact on it. And again, something's going to have to give here soon because you usually don't see Bitcoin go sideways for this long in that tight of a compressed range. So I don't know whether to be nervous or excited for the next breakout, which based off historical trends should be to the upside, but who knows? Everything works until it doesn't. So there we are, stuck in this sideways range on Bitcoin. 0.19% slide today. I did sell TTD puts today, Big M. We'll talk about that in just a second. I did. I was really disappointed at the premium on it, to be honest. It really was not good, but I'll tell you about what I did there. Yeah, right, Margaret. But did Michael really buy Bitcoin? That will be the never-ending question that I keep asking until I finally get some closure. And unfortunately, I'm not influential enough to talk to Michael Saylor and say, could you just show me? Could you just explain to me? Show me a wallet address that you control, and I'll be all over it. Love it. But I'll continue to ask people I know in the industry until someone gives me an answer, but no one has yet. So Bitcoin, let's go to crude oil. Man, yesterday's aggressive sell-off. We have a pretty interesting candle formation today. After a really aggressive sell-off, you've got kind of this almost a hammer pattern. And I took volume off my charts. Let me add volume on here real quick for everybody at home. Get that volume on because I do like to see climactic volume every now and again. Today, even though you had a really aggressive sell-off yesterday, you have declining volume. So not that excited here with today's action in crude oil, but it does lead me to believe that we'll get to that yellow box here shortly, which is more downside movement. Now, gold. Back to another all-time closing high for gold. The song remains the same. If you follow barchart.com or barchart on X, it's funny. I like giving him a hard time because he posts this. He goes, gold, All-time highs again. I'm just like, broken record, dude. Again, over and over and over again. But it's interesting. Gold just keeps on trucking. I did actually buy some gold the other day, but I bought it in the crypto world. For my crypto class, I bought some PAX-G, which is similar to a stable coin, but it's backed by gold. So you have a token that's backed by physical gold bars, which apparently is audited. We'll see. So that was your gold chart. Again, things look fantastic there. We talked about this being a hanging man formation, and I mentioned that I believe these patterns are bullish, and lo and behold, there it was. Nice move to the upside. Podium time. Top 3, S&P. Well, S&P is looking the best out of the 3 indexes, in my opinion. It's coming right back up to a triple top, right? This looks like it's poised to break higher, and the reason it looks like it's poised to break higher, it's coming back into those highs that you can see at the top of the yellow box, and then the bottoms have been getting higher and higher, meaning that people are accumulating S&P. They're pushing it higher. So we'll probably have a little bit of a stall, maybe tomorrow at 6150. My guess is a little bit of a pause. If it doesn't pause, you're going to get a big rip to the upside through the top of this all-time highs on the S&P. So 1.03% jump to the upside today for S&P, which is great. Russell 2000, even though it was better performance number today than the S&P, was up 1.10%, still technically nothing. I don't find anything appealing here from a trade perspective. And lastly, NASDAQ, which did something interesting today because of this big, robust move, mainly because of the Magnificent Seven stocks, as Oliver says, NVIDIA climbing again. Yep, broke through both of these. Now, I'm going to move this line on Snap to the high point right there. You'll notice I snapped that to the high point from December 26th. That is really the highest point of this range before we get to that all-time high from back in December 17th. So today, we closed right at it, literally right at that number, 22,111, and we're currently at 22,113, so I call that sitting right on it. Let's see how this transpires. Typically, when that happens, it'll have a little bit of weakness. It'll sell off a little bit, but momentum is strong right now, really, really strong. As you get those Ninja Trader hosts back on, okay, I'll reach out to them. See if they want to come on. Let me go to some of the questions out here, and then I'll go to the trade desk here in a second. Oliver says, I'm seeing a lot of ads for buying gold and silver coins and bullion. Sure. Coin dealers want to sell it to you at the highest prices of all time. Why wouldn't they? And because demand is so high, they're probably charging a premium for it. So, yeah, I would imagine. Joe says, Merlin, I just can't get my brain around why Bitcoin market isn't skyrocketing with all the buying options out there. Where all these institutions buying? And that is a big question that I have as well, is why aren't we seeing, if we have such institutional adoption, or at least it's headed that way, why aren't we seeing more upside moves and gains in Bitcoin itself? So I have a couple theories on that. Let me bring up the Bitcoin price chart here of the spot price. My main, I guess, belief here is that as we saw this election shaping up, there was already moves up in Bitcoin, right? If you could go back into 2023, but really this big move in Bitcoin started long before. So by the time Trump won his election, like the day that Trump won his election, Bitcoin was already up 34%. So I think a lot of that was priced in. Now, if you go from peak to trough here, it's tough with this dang snap mode on it. There you go. If you go from peak to trough, from the lows we saw back in August of this year, Bitcoin's up 120%. So I would argue that it's already had a pretty significant move, and this may have been a lot of institutional investors positioning themselves for it. As we consolidate here, I think you will probably get another wind, and you have to ask, what's that next wind going to be? I believe that next wind will be either the digital asset stockpile for the U.S. or a strategic Bitcoin reserve, which I think will probably happen within the next few months. Cynthia Loomis is definitely pushing hard for that one, and we'll see how this goes. But right now I don't really see anything that's that big of a buyer other than Michael Saylor, and as we've pointed out, Michael Saylor's buying billions of dollars worth of Bitcoin, but I don't see price moving. That has me very skeptical on it. Either way, I am in the camp of Bitcoin is going to go higher over time. Therefore, I'm going to have a little bit more exposure than I should have to Bitcoin and its derivatives such as IBIT and MicroStrategy. So let's look at these real quick. Then we'll go to the FANG stocks. Here's MSTR. MicroStrategy looking pretty weak. Bitcoin hasn't had any big moves. MicroStrategy is kind of feeling flat right now and compressing. Right, not really good. The last range lasted 8 months. Owzers. The premium for rare gold coins is very nice right now. Maybe I should sell mine, Big Eb. I got a few nice gold coins. Let me go to our Magnificent 7 here so we can see what the big catalyst was today. Obviously, Tesla back in favor, had a real nice move to the upside. You had a Harami pattern yesterday on elevated volume, which is noteworthy, and today followed through with a nice big update of 5.77% for Tesla. Fantastic. 355.94, obviously a component of the NASDAQ, which is why the NASDAQ led today. You have NVIDIA, which is up 3.16%. Get the volume out of there. And the big question now is, does NVIDIA close this gap? I think it will. I think it will. The DeepSeek fiasco, which everyone was like freaked out about and really had me questioning, is this whole AI thing going to come falling apart? I think that the DeepSeek, not fiasco, what we'll call it, the DeepSeek innovation was all about technology using inferior components. So if I can take that new idea of technology with superior components, then I should be able to, elevate or advance the industry even faster. So I think this is going to really just end up bringing in more and more buyers for NVIDIA products. I don't see that changing. Not just their hardware, but their software and programs as well and services. So I think you'll end up closing that gap on NVIDIA here relatively soon, continue to move higher as it still is the dominant player in the space. And then Apple. I mean, a lot of these Magnificent 7 stocks are really reaping the benefits here. And I think that a lot of this has to do with the president, the affiliation of Donald Trump to Elon Musk, Jensen Huang, Tim Cook, Pichar, all the different CEOs that are making up these companies. I think you're going to see some benefit for them there. Andre says deep fake. Well, there's a really interesting podcast. I know I mention this all the time. I try to listen to this one at the gym, but let me real quickly bring it up for you. And I will see if I can find the exact one. So Lex Friedman does a bunch of different podcasts. It's this one here. I will put it in a chat for you guys. And let's see, it's on mute. So here, I'll put it in a chat. If anybody is interested in the AI space and what really happened with DeepSeek, I strongly encourage you to listen to this interview. It's a long one. It's 5 hours. But here it is. There's the graphic. It's called DeepSeek, China, OpenAI, NVIDIA, XAI, TMC, Stargate, and it profiles two guys that are deep in this industry, Nathan Lambert and Dylan Patel. It's tough to get through because of terminology. I mean, they really get deep. Now, they do a great job when they start using all these crazy acronyms that are in this industry. They do a great job of explaining it. I'm about a third of the way through it. I'll probably go to the gym tonight and try to listen to the rest of it while I work out. I'm the guy that listens to this type of stuff when I work out now. I used to be house music. Now I like information. Very interesting with regards to the technology that DeepSeek came through. They're code people, so they're breaking down the code and looking at it, trying to decipher exactly what they did. They've gone through the code stacks, and you really will learn a lot if you are at all interested in AI and what the hell is DeepSeek? Why is it such a big deal? Is it the end of AI? Who's involved? This is probably one of the best interviews I've ever listened to. Extremely informative. Anyway, it's not like I'm giving a sales pitch for Lex Friedman here, but anyway, if you are interested in it, check that one out. It's 5 hours. It's a long one, but it's worth it in my opinion. At least as far as I've gotten, it's been very, very, very good. Okay, says 5 hours is crazy, but we're taking it back that you don't use dark mode on YouTube. You know what? I like the bright mode, Kenny. I like the bright, keep me awake. If it's dark, I'll fall asleep. I don't know. Matter of personal preference, I guess. A matter of personal preference. I was going to say I could go in here and change it for you if it really impacts you. This area up here, this office up here, is just really to broadcast the show and do video recording. So I really don't care. Don't bother me. If you want the dark screen, I can do the dark layout for you. Happy to do so. All right, let me get out of this and move back. Anyway. Yeah, even with dark screens, like charts, you notice that my charts are bright as well, right? Bright as well. Just don't fall asleep. I'm not falling asleep on you, bud. Takes a lot. I don't even fall asleep when I'm in bed trying to fall asleep. But dark charts, just, I don't know, not really my thing. I know some people here like them. I've tried, trust me, I've tried everything, and I just go by what works best. Yeah, normally, like on my computer downstairs, just so you know, Margaret likes the white screens. We actually voted on this one. We voted on this one. You guys actually said you prefer the white. That's why I'm staying with white. But, uh-oh, no spinning. Please, no spinning. Yep, I see it spinning now too. It may be the weather. I don't know why, but let's see. I'm running a speed test just to make sure it's not me. Oh, wow, JD. Thanks a lot. It's because I'm old. I need the extra light. Yeah, my internet's running really, really slow right now. No clue. I was just running up, 62. I don't know. And I'm going straight fiber, guys. So I've got straight fiber, but my internet just dropped from like 350 to now I'm at 60. There you go. You can see my internet right there. Not good. Not good. Oh, yeah, Andres. That interview with Brett Johnson, but that has nothing to do with AI, but it is amazing. That is such a great story. Again, it's Lex Friedman, the Brett Johnson interview. Please check that one out. Check that one out. It's a good one. All right. Thoughts on Meta for Damiani. Look, with regards to Meta, which wasn't the best of the day here today, but it still is all-time highs and just keeps on going. Look, how do you play this, Damiani? Right? It's tough. How do you play this? Do you try to buy it now, and now you're just chasing something at all-time highs? I wouldn't. If it was me, and let's say you really wanted to own Meta, I would be selling puts relatively close to at the money. I just feel like there's going to be a correction here. I mean, this has been a phenomenal run. In the last 21 days, Meta is up almost 24%. 24! I mean, that's 1% per day. That is incredible. That will not last, right? That will not last. That would equate to 365% for the year. That will not last. What's going to bring it down? I don't know. At this point, I like Meta. I think that their AI play is really doing well for them. They still have a lot of tons of users, and they're also branching into other markets with Instagram, etc. So I'm bullish on it. I just couldn't bring myself to buy it right now, Damiani. I couldn't do it. That is a absolutely gorgeous chart. Phenomenal. Margaret and her hood still going. Oops, not Nud. How about hood? Wow. 14% up today. Please tell me you're taking a little profit, Margaret. Just a little. That's a pretty beautiful chart. And it's incredible the turnaround this one has had. Because remember, last year we were talking about it down here when it was in the $9, $10 range. I think it was even lower than that, $8. And I was saying, look, their model is broken. Their model's broken because of free trades, and everybody knew it. They reinvented themselves somehow and made it even better. And maybe that's the crypto side of things or some other business adjustments. But wow, what a recovery. Pretty incredible. If you own Meta, do you sell it and buy it back later at a cheaper price? No. Personally, I would be, if you owned Meta and you were long on this one, I'd just set a stop loss and trail it. I would set a stop loss and trail it, or I would sell calls, but I'd put them much higher, knowing how much it moves, because you could go in here and calculate out your ATR on this and see what its average daily move is. I would calculate that out so let's say it moves $10 per day. Okay, well, I would do 10 per day. Over the next 5 trading sessions would be $50. So I would sell my calls $60 higher, because I don't want to get rid of it, but I want to add in a little bit of extra earnings on top of it. So I would do what I could to hold it, but I would definitely be selling calls against my position to generate premium and capitalize on that. So, yeah, I wouldn't be buying right now. That's for sure. Yesterday I meant hedging with all-time highs doesn't have the risk, at least until we break through all-time highs. You could trade futures with Hood now. Oh, okay. Well, there's more business model. Okay, well, that's good. More business, more revenue, more income. There you go. Merlin, what's your opinion on ETFs buying for retirement accounts? Love it. I think you should have retirement ETFs in your retirement account. Remember, in your retirement account, you shouldn't be taking abnormally large risks. You shouldn't be out there loading the boat on MicroStrategy in your retirement or 401k. Let me take that back. If you're in your 20s, then loading the boat on MicroStrategy, whatever. You've got 45 years till you retire. But if you're like in your late 50s or 60s, you're playing with fire, because what happens if something goes wildly wrong with MicroStrategy and it just comes tanking down? I think you're much better off going back into either the index ETFs like these, QQQ or SPY, diamonds, or using some of these sector ETFs, which are diversified and can have 30, 40, 50, 60 holdings in each one. So I would find market segments that I'm interested in, like SMH. I'm interested in SMH. And I'm interested in SMH just because it's semiconductors, and I believe that's going to get more and more competitive. It's going to get... Can you close any unused programs? They're closed. This computer is... You know what it is? It's Google that actually causes the problems if it's choppy. Let me just really go to my task manager quick just so I can show you. So if you look here, you guys can see the performance. It's Google that's killing it's using 72% of my memory, and I've got, I think, 32 gigs of RAM. So Google is just a monster eating away at my resources. But my CPU is barely being used. My GPU is barely being used. So everything's fine. OBS is using 38% of my GPU, my video card. Everything else should be fine. So I'm not exactly... not sure why we're getting choppiness and skippy today. I know my internet is slow, but that's unfortunately nothing I can do about that. And who knows why it decided to bog down. All right, let's talk about TTD real quick, just so I can get this one out of the way and explain a little bit about what's going on. The trade desk turned into a nuclear meltdown today. So you can see here, when we've had the red line, that's where it was at yesterday, and it was in the inside of this gap. So today, it gapped down and continued to sell off all day. Now, they pointed at lower than expected numbers. They pointed at restructuring, and then they did some things. They miscalculated the cost. Their earnings year over year is up 44%. Their revenue is up 22% year over year. They missed on EBITDA. They expected to make $366 million, and they came out at $350 million. So they were weaker there. But if you look at the numbers here for a company they're not failing. They may have some issues, but they're down 42% right now off that all-time high. So I did sell the Friday expiration, not tomorrow, but next week. So it's 8 days worth. I sold next Friday's $80 strike prices, and I collect about 1.5% worth of premium. Now, I'll bring up the option chain. Let's see if it actually lets me do this. Let's go to TTD, and we're going to go to stocks. There's the trade desk, and we'll go to option chain, and I'll click for the 21st. Actually, let me make sure I got the 21st. I may have done it for this Friday. I'm pretty sure I did it for the 21st, but I'll just verify just to make sure so we don't have any misconstrued or bad numbers here. Yeah, I did the 21st. I did $80 strikes for the 21st. So if you look here, that $80 strike right now is paying $1.40. That's about 1.7%. $1.60 would be 2% at the $80 strike. So I decided to sell some at the $80 strike. Not a lot. This is a very small position. I don't feel that comfortable with it, but I do think that this is overdone. I think that this is one of those situations where people are overreacting to the earnings numbers here. I guess I have to bring Larry on to run through all the fundamentals and see if the number's still good. Because remember, Larry liked the trade desk. He was bullish on it from a while back, though. Not like that he just became bullish, but he's been bullish for quite some time on TTD. This obviously ate away at a lot of those gains that he had on the trade desk. But I decided to go and do the 80s. Now, that's kind of crazy. Yeah, I'm willing to own it. I don't think the business is going to go away. I don't think the business is going to go away. I think that there could be some problems and maybe a little bit more downside here. But longer term, I'm good buying it after such a significant drop. I think you'll probably get a pain point, what do they call it, dead cat bounce on this bad boy, where it pops up real sharply and just kind of, I think it's a little bit overdone. I'm willing to own it, yep. From a fundamental perspective, I trust Larry's analysis on this one. And, just way overdone. a lot of times people will overreact to the news. In this case, this whole, accounting issues, and now there's a lawsuit against them. So people immediately filed a lawsuit because it gapped down so much. It's like, guys, this is part of investing. You got in a trade that gapped down against you big time. So yes, I have the puts expiring next Friday, the 21st. We'll see. If I own it at 80, cool. I'm fine with that. But there you go, Big Ab. So my 100% equities is in my IRAs risky. Not necessarily. Good. I'm going to touch on that one. Thanks, Big Ab, for sharing. So Big Ab is 100% equities. Now, to be fair, Big Ab is probably more active in the investment and monitoring of those accounts, more in touch with than the average investor. The average person is going to put money into a fund and say, I don't even know what I own. Just put it in some mutual funds and we're good. Most of you that are managing your longer term accounts are much more astute about what you're in, why you're in it, how long you're going to be in it, stop loss, all that stuff. So you're better off than most people. Even if you are in a bunch of different, you said 100% stocks in your retirement account, that's not necessarily a bad thing. Depends on what stocks, right? Now, Big Eb is, if I'm speaking for him, is more on the tech side of things. So he's going to have NVIDIA in there. He's going to probably have some MicroStrategy in there. So he's taking a lot of chances here, but he's also riding market momentum. And it's been very clear that since October of a year and a half ago, we are seeing great momentum to the upside in tech. So I can't argue staying long tech and staying until this trend ends. So the key here is if you are all in tech, 100% or what have you, that if this does break a certain number, and I don't know what your number is, every one of you will be different, but if it breaks a certain level, you've got to go, okay, now I need to close out my long positions, or now I need to start buying puts for protection and hedge myself here if we start to break levels. And the question, if you're in NASDAQ, because I know a lot of you are in tech-heavy positions like ISRG, NVIDIA, Microsoft, etc., is that point here? Is that 499 for the Qs? I would think so. I would think if you got below 499 that you should be very careful. Probably want to look at maybe liquidating some of your positions. If you don't want to take the tax hit, then just buy puts directionally and with enough put options to cover your entire position. But I think you're fine. I mean, trend is your friend till the bend at the end. It's hard to argue what's going on with the NASDAQ here, and it probably will keep on going until it doesn't, right? So there you go, Big Gap. Good job. Let's see what else I got. Okay, make something then. They didn't miss earnings by that much. Exactly. They didn't miss earnings by that much, Steve, but they also they lost a lot of money in restructuring their business. Now, I don't know the extent to which that restructuring was going on. They've been a pretty successful business model. If anything, I think they might be modifying for the better. We'll have to wait and see how the trade desk ultimately pans out, but I'm not sweating it. This isn't one where I'm selling like 40 contracts. It's a small position, so not too big of a deal. Good question, Andres. Big Eb says 100% equities. Big Eb, is it U.S. equities, or are you branching out and doing international stuff? By buying some FXI, getting a little exposure to China with some ETFs there, some rubles. No one else chimed in, so I figured it might be just me. Very odd. I rewound a few minutes, and it was my stream that was choppy, so I'm on an iPhone. Maybe. Could be. And no worries. I do know that my internet is slow here. For some reason today, it's slower. It was 62 megabytes per second, and now, let's see where we're at now. Yeah, I'm at 68, 70. So, Big Up says, you pretty much nailed it. Plus cash positions and T-bills and real estate, non-retirement accounts. And there I think is the best part. He's got his U.S. His retirement account, 100% equities. But real estate, T-bills, those are hedging investments, right? You're not going to get the same volatility with real estate that you are with NVIDIA. With T-bills, you're not getting volatility really at all. You're getting short-term income stream and locking in, roughly 4%. So the mix of investment vehicles here, I think, is hedging himself a little bit and maybe softening the blow if it does happen. But like any of us, there needs to be a point where no matter how bullish you are, you got to change your tune. Right now, I think everybody here is pretty bullish, regardless if I know I have some of you that think that Trump's ruining